Hello, everybody. Welcome to another webinar hosted by Global Mortgage Group. My name is Donald. I'm one of the co-founders of GMG. And today we thought it would be a timely update, given where we are in the world, to update all of our viewers on the latest on how to obtain a US mortgage as an overseas investor. So first off, next slide, please. First off, I'd like to talk about why obtaining a mortgage overseas for US property is so difficult. Well, first place that most people go to are banks. Traditional banks were created to serve its own citizens. If you're lucky enough to find a bank that could help you and find a bank that can offer US mortgages, they would require at least 50% down payment, a US credit score. You'd have to open a bank account, which takes quite a bit of time, and have a minimum deposit there at all times. You require 2 years of tax returns, income verification, excuse me. And this process often takes 4 to 6 months for a foreign national to complete. With many of these loans getting denied at the very last, towards the end of the process. In fact, many of the traditional banks, they only approve about 40% of the loans that they see. You'd also have to obviously speak English and match their time zones. And if you're living overseas, that can be, quite painful. It's not an easy exercise for anybody. And we've fixed this problem. The next slide, Dipti. Excuse me. So who is GMG and why use us? Well, Global Mortgage Group is the world's only truly global mortgage platform. We connect the world's best banks and lenders directly. So we've taken the friction out of borrowers who want to find the best rates and lenders, and we've helped lenders find the best borrowers for them as well. In the US, we're particularly comprehensive. We have direct relationships with over 150 banks and lenders and more, and it's pretty much always we find the cheapest loan option available, given your circumstance. And since we only focus on expats and foreign nationals, we're sure to find the best loan option available for you. So I'd like to touch on 3 key points that makes us unique. One is processing. One, we handle all of our processing in-house. We don't outsource it like traditional banks. Most of our loans take 30 to 40 days to complete, and this is compared to 4 to 6 months for traditional banks. Number 2 is low down payment. GMG's US mortgage programs require as little as 25% down payment for foreign nationals and as little as 20% for US expats. Now, this has changed since the pandemic. Banks are a little more risk averse. Previously, the LT loan to values were higher, and we expect that to normalize later down the road. And ease to qualify. We approve over 97% of our loan applications because we're a solutions provider. We find the bank with the best loan options that meets your requirements. And we work directly with our lenders to create loan programs specifically for the needs of our clients. Next slide. So here I'd like to talk about the current interest rate environment. Now, I think many or all of you on the call sees the news every day and how interest rates in the US and globally are declining. In fact, in the US, you may have seen that mortgage rates dropped below 3% for a 30-year fixed mortgage, the first time in history. And many experts believe that this could get as low as 2.75. Now, one thing which is important for the viewers of this call is to realize that rates are very different from foreign nationals and for overseas expats. These really low rates are reserved exclusively for US expats or US citizens that meet all the criteria to get that rate. Perfect credit, W-2, US income, filing taxes, having a US credit score, etc. Now, a lot of our business lately has been refinancing. A lot of US citizens have taken advantage of these low rates. And in fact, if you look at purchase applications in the US, they're up 33% as of last month, and refinancing applications are up 11% as of last week. And we see similar types of business growth as well in our business. In fact, at the moment, we have 399 loan applications that we are submitting to our network of lenders. Next slide. Now, we often get asked, where are people buying? Where should I buy? You know, and while we're technically a mortgage specialist, we do see some of the trends, and we're happy to share them with you. And this is consistent with the overall picture in the U.S. Now, if you look at the map and see the cities that are shown, you will see that these represent major cities where gentrification is happening. People in San Francisco move to Los Angeles, people in Los Angeles move to Denver. Everyone's looking for the best opportunity for growth. And also as a property investor, you want that capital appreciation, you want the rental yield. In fact, Austin, Texas has the highest rental yield of all cities in the US. And this is also where a lot of millennials are choosing to buy homes as well, because that's where they're choosing to kind of settle down with their young family. Next slide. Now, the property trends I mentioned earlier were, purchase applications, they're incredibly strong given where we are in the world. They're up 33% last week. Refinance applications up 11%. And this is very important. And I think this also shows the strength of the US residential market. It's such a big market, but the home seller return on investment is up 36% overall. And what that means is that they've calculated that from when you purchase a property to when you sell it, on average, across all of the United States, you would have made 36%. Last but not least is home price sales. Home prices continue to rise despite the global pandemic. Now, before we jump to the next slide, one thing I'd like to talk about is how mortgage rates are determined, because we get that quite a bit. A lot of our foreign national buyers will say, well, I see that rates are 3%, why can't I get this? Well, I think if you've been one of our clients and you've listened to our webinars, a few webinars ago, we went into detail on how these mortgage rates are determined. And they're determined solely by the secondary market. They're not determined by where bond prices are or where the prime rate is. And that is to say, when lenders take the loan and they sell on the secondary market, the market price is how they determine their interest rate. So it's related to where bond yields are, but not necessarily exactly correlated to. In fact, we mentioned a few months ago, the mortgage market for foreign nationals actually completely dried up. From March up until June, there were no foreign nationals obtaining mortgages in the US. Now, because we're in our lender engagement team is in constant communication with hundreds of lenders in the US, the foreign national market has just begun to open up as of last month. And that's also one of the key impetus of why we've had this call today, to really update all of our fans and our clients what's happening in the market. Next slide. So the remainder of the webinar, I'll hand it over to my co-founder, Robert Chadwick. He'll talk about the process involved, how things have changed, and how you can obtain a US mortgage through GMG. Thank you. Robert, over to you.
Thank you, Donald. My name is Robert Chadwick, as Donald had mentioned, one of the co-founders of Global Mortgage Group. I have over 20 years experience in US mortgages from both wholesale and retail aspects. Today, I wanted to talk about a few things. And one thing that we're receiving a lot of queries on is the impact of COVID-19 and what its effect has been on the US mortgage market. I'll talk about US expats and the different programs that are still available to qualify, the exceptional interest rates. I'll talk about foreign nationals, and I'll touch on also pre-COVID and post-COVID situations and where we feel the outlook of the market is going to be. So next slide, Dipti. So the good news is if you're a US citizen and you have a conforming loan amount, which in most counties is 465,000, and the high cost counties around 765. You're really not going to see a lot of difference in the effect of borrowing. There are some requirements that have tightened, and obviously the loans and the underwriting is looked at much closer than maybe it was 3 to 4 months ago, but the loans are readily available. The rates have never been lower. And we have a variety of programs which can probably fit everybody's needs. So I think, you know, if a lot of challenges and a lot of US citizens that contact us have contacted banks, whether it's in their home state, city, or even international banks. And it's challenging. I mean, when you're a US citizen and you don't receive a W-2, you're earning your income abroad, perhaps maybe your housing is paid by your employer, or if in many cases you've been abroad for so many years that you have very thin or lack of credit. So these are the types of things that Global Mortgage Group fully understands. And these are the types of lenders that we work with. So because we only do foreign nationals, expats, investments in second homes, we know exactly which banks within 5 minutes of talking to you, or which lenders will fit your situation. So unlike going to, say, a local bank or an international bank where they may only have one program, the advantage of us is, besides being Asia-based, is we have a variety of programs normally for one borrower. So, next slide, please. So the challenges for US citizens since COVID, and again, as I discussed, conventional mortgages, they're pretty stable right now. Fannie Mae has agreed to pretty much buy anything that fits the requirements. So banks are still lending, and they're lending quick and they're lending hard, and it's causing quite a bit of slowdown, but it is it's still readily available. Now, the tightening of the credit score. Previously, you needed to only have a 640 credit score in order to qualify for what we see here as a standard conventional mortgage. Since the COVID crisis, this has increased to a minimum of 720. And in some cases, some lenders don't even want to look at you until you're at least a 760 credit score. So that's pretty significant change. A lot of lenders are requiring a 12-month reserve requirement. And what that means is you need to have in some account, and it doesn't have to be really liquid. It could be a 401k or an IRA if you're a US citizen. It needs to be some account that you can draw down on in the event that you lose your job or are unable to make payments. So it wants to see if your mortgage payment, just as an example, is $1,000 a month, they want to see that you have some account with $12,000. Employment verification has really tightened. Currently, they are calling the employer at application and at approval, and again at funding, which means that if you're considering changing jobs, this is it's a strict requirement. They're asking, what's the likelihood of continued employment, et cetera. And this is mainly due to the massive job loss that's global. And some banks, not all, but some banks have limited cash out. So the amount of cash out that you're able to release out of your property could be restricted depending on various factors. Jumbo loans. So anything that is exceeding conforming loan limits, which it seems to be quite common, especially for the expat community. There are limited lenders, but it is definitely starting to open up. So we're seeing more and more lenders willing to take jumbo loans. Pricing is really good. So it's actually a very positive sign. The rates right now for US citizens have never been the lowest since they started tracking. It has actually dipped below 3%. And these are 30-year fix, most of the time, no origination, so no points. It is an absolute amazing time to refinance. So if we go to the next slide, I'll kind of explain that a little bit more. So again, everybody's seeing where rates are at, 3% and below. Investment properties, it's around 3.5. So if your rate is above 4%, or even just slightly at 4%, or it's definitely a good time to look at refinancing. And we're happy to take a look at your current rate and do a comparison of what it would be with costs. But you know, the advantages of refinancing is obviously cash out, lowering your rate. Often you can do both. And if you have any high interest debt, credit cards and so forth, consolidating debt, you know, it's quite interesting now because we haven't seen a real dip in the prices of properties yet. You know, a lot of the government initiatives that have been put in place are keeping foreclosures low or defaults low. So we haven't seen the effect on the property market, at least in most places. So thinking about refinancing now is probably the best time that you could ever think about it, because interest rates are low and they're going lower, and property values are still maintaining at highest levels ever. So it's almost the perfect storm. And although requirements are much stricter, as long as you're able to meet it, you're gonna fly through this process quite easy. Next slide, please. So that was it for U.S. citizens. There's likely a lot of questions, and we're happy to field them after this, or send by email or WhatsApp. But again, to kind of reiterate what I just said, I think for anybody that is holding a mortgage on a U.S. property, it's definitely worth looking at lowering the rate and even pulling the cash out. For foreign nationals, pre-COVID, we really had this going smoothly. The foreign national mortgages, as Donald had mentioned, are very different in how the rates and LTVs are calculated than the standard U.S. citizen mortgages. And it's all based on the demand of the secondary market. So pre-COVID, we were able to do up to 75% loan to value on both purchases and refinances. Rates were from 4% up. We allowed foreign income, but we also had programs that you either stated your income, a letter from your accountant, or in some cases, we just went off of the rental income of the property. And no US credit was required. So that's where it was pre-COVID. Now, when COVID hit, it impacted that tremendously. And basically, most foreign lending stopped for a brief time. But again, as Donald had mentioned, it is starting to turn back on, and we're seeing more and more lenders starting to offer more and more programs, and rates are slowly starting to come down, and we'll see where LTVs land. So next slide, please. So post-COVID, the loan to values are what has been affected significantly. So right now for purchases, the maximum loan to value is 65%. So still quite aggressive. So you're looking at a 35% down payment. And refinancing, depending on the lender, it's anywhere from 55 to 60% loan to value. And the reduced loan to values, in my opinion, are based strictly on where the lenders want to, they're not really sure where the market's going to wind up. And as I had mentioned in a couple slides earlier, you know, where are values going to be, say, in 3 to 6 months from now? So they're trying to hedge that dip in the market. Rates have increased, but they're still reasonably decent. And there are interest-only option programs available, meaning that even though you may receive a higher rate, say somebody is looking to cash out, they want to get equity out of their property, which is very, very common now, and the rate may be higher than what you're currently paying. But if we were to give you the interest-only option in order to extract the equity, often your payments may be equal or possibly even less than what they were if you were paying principal and interest. And it gives somebody the good opportunity to get access to liquidity, and then down the road, maybe a year, 2 years, then they refinance into a lower rate loan as things kind of stabilize. We still allow foreign earned income, the CPA letter or employer letter as income, and we also allow something called debt servicing, meaning that we go off of the current rental income off of the property, or in the case of a purchase, the projected rental income of the property, meaning that you as the borrower themselves aren't required to provide any kind of income documentation. And of course, as always, and what we're probably the most well known for is we can use your credit score or your credit report from your home country. Next slide, please. So I think that covers everything that is going on in the market. Now, our outlook is things are improving. Every day we're speaking with lenders. There's a positive outlook, even though things may not seem so rosy in the U.S. But it is they're very bullish about where things are going to go. So we feel that rates will come down some. LTVs actually could go up, I would say, to probably maybe 70% if somebody has the LTV may be an issue. But getting to being able to extract liquidity if it's needed, right now you're not going to find a better time, whether you're a U.S. citizen or a foreign national. Again, rates are at all-time low for U.S. citizens. And even for foreign nationals, they're in a decent state, but we have ways to be able to reduce your payment. But the most important things, property values are still high, and lenders, at least most lenders, have not capped the amount of money that you can extract out of your property. But in the event things do get worse in the U.S., it is possible that we may see only purchase mortgages. Or we may see just rate reduction loans, not really, or very, very limited cash out loans. So if you're thinking about doing this, again, we're happy to analyze what you have now as opposed to what we can offer today. So thank you very much for your time, and any questions, we're happy to answer them.
So if you have any questions, do type it in. We have Prashant raising his hand.
Okay, we actually do have a question from a past client. Hello, Richard. Can I remortgage my rate now, or do the mortgages approved in early 2020 have to wait for a certain amount of time? Good question. Normally, well, especially if you're looking to pull out cash, they want to see that you've had the property for at least 6 to 12 months. There may be some options if it's a matter of just trying to reduce the rate. That's certainly possible. But I think maybe, Richard, if you give me a call after this, I'm happy to kind of go over it in more detail.
There's the next question I can take. I have a question from a client who's asked, do you accept PRC customers in income? And the answer is yes. We actually have a team in China based in Beijing and Shanghai. We do China-based clients all the time, and we've created some loan programs which accept Chinese credit reports as well as income. So the answer is yes.
Okay, we have a question of, can I purchase using a company in the US? It depends on the type of loan. There are programs that will allow you to do this, but in general, most US mortgages are purchased under the individual, but you can always close in an LLC, especially if you're a foreign national. It's much, much easier. Okay. Is preference given to resale or new properties? It's basically the same. There's no difference in rate whether you're buying a resale property or you're buying a new build. I mean, new build may be a little bit tighter on the restrictions just because there needs to be a certain amount of ownership of the property that's already turned over, and the homeowners association needs to also be turned over to the homeowners and can't be in control by the developer at the time of closing. We got a question that says, hi, this is Thomas from Hong Kong, a permanent resident and in Hong Kong and an EU passport holder. What are the fees and commissions of the loans you help arrange? Say that I want to purchase a condo in LA for $500,000. How much money would I have to pay you in handling the whole process? Well, it really depends on the type of lender that we use. Right now, for foreign nationals, we are using probably 10 different lenders, and most of these lenders require GMG to charge the borrower. And it depends on the loan amount. It ranges for anywhere from 1% to about 2.5%, depending on the loan charges. It's very standard common practice in the US, and we just follow that here as well. Sure, if I'm getting...
There's one from, right, we have a client actually calling us from China. Says that I've purchased 5 units in LA with cash, and I'd like to take out some equity. Is this possible? Absolutely. So we mentioned this earlier. Robert mentioned this earlier, and this is a big part of our business, is that a lot of Asians, in fact, it's surprising how many foreign nationals in general have purchased property in the US with cash, 100%, because of the lack of ability to get a mortgage. You know, a lot of borrowers don't know where to go. The banks can't do it. So definitely, you know, it's common that, you know, an investor purchased a home in, let's just say LA 5 years ago, maybe for 500,000. Now the home is worth $1 million. We could easily pull out, you know, 600,000 in cash in a fairly short period of time to free up liquidity. And a lot of that has been to purchase more property. So for the client that asked that question, the answer is yes. Please give us a call and we can walk through that process for you.
You missed out a question on if we refinance everywhere in the US.
Yes, so we can offer loan programs for most of our programs in every state in the US. It's not restricted, although certain programs may be limited, but definitely possible.
I think that's all the questions for today.
Okay. Well,
we have another question. It says, do you do multi-unit or commercial financing as well? Yes, we do. I mean, you know, this call is for residential mortgages, but we absolutely do big ticket commercial or multi-unit you know, mortgage loans as well. Oh, here's a new question. We've never had this one before. It says, do you offer referrals if we refer? Yes, we have. You know, we do have agents around the world that help us, you know, introduce clients to us, and we can certainly, you know, work out something. So please give us a call.
There's another question regarding loans for foreign nationals. Would it be easier to buy first and then refinance, or is it the same way? So if you're looking to close on a property in cash, and you know, one of the very common things, and I think it seems to be very, very common in certain markets, a lot of people buy a distressed property, they renovate it, they put a lot of money into it, and they fix it up, and then they contact us 3 months later and say, hey, I bought this property for $50,000, now it's worth $150,000, can I pull my money out? Lenders they won't allow you to pull cash out at the current value after renovations if you haven't owned the property for at least 12 months. I mean, that's pretty much across the board. Now, if you want to just refinance it at what you paid for the property, that's entirely possible. So if you took a bridge loan out or you paid cash for it, certainly you can do it at what you paid for it, but there is a wait time if it's a matter of looking to pull cash out.
We have the next question. I'm an entrepreneur and I don't have stable income, but have a lot of savings. Do you do bridge lending in the U.S.? Yes, actually, it's a big part of our business. You know, a lot of times our clients don't want to go through a loan process and they need to kind of transact on an opportunity very quickly. And we have lenders that specialize in this, so you can purchase or refinance a home, land, a commercial property in 2 weeks at very competitive rates. So please give us a call again, and we can walk through that process with you over the phone.
Okay, another question. Do you do development loans for new property in Australia? I think I'll let that one.
Sorry, my headphones just ran out of battery, so I'm gonna have to use the, can you hear me?
Yes.
Okay, yes, we do. You know, it's a little more difficult in Australia. We do work with some wholesale lenders and some specialty lenders there. So please give me a call. We'd have to get more details. But the short answer is definitely we could take a look and try to help. Oh, here's interesting. We're getting a lot of questions unrelated to the US, which is good. I'm an entrepreneur in Singapore and I have a bungalow. And can I use the property to, what is that? To get a loan? Yeah, well, I think that leads to the previous question as well. It's what we call bridge lending, and we do, in fact, we have our own pool of capital to do that in Singapore. So, you know, it would be condos or homes in Sentosa or Singapore where, you know, we can pull out cash within 2 weeks at very competitive rates. So something, you know, if you're interested, please contact us and we can walk through that process with you.
I think that's it. Thank you very much. And if anybody has any questions or they think of something later, feel free to email any of us or send us a WhatsApp and we'll get back to you.
Actually, yeah.
Is there one more question?
One more question. This is regarding Japan. You know, about a year ago, we were offering Japanese loans. It's a really difficult market just by the nature of the Japanese residential property market. We stopped doing it because the lender that we used had stopped as well. But I think if that's something that interests you, please give us a call at the email that was provided, and you know, we can see if we can help.
Okay, I believe that's it. So thank you very much, everyone, for your time. And there's another question, 2 more questions.
Oh, more.
Do you take funds from us up front or draw them down? So you pay GMG no money directly on any of our loans. The only cost that you will incur while you're doing a loan up front before it closes is the appraisal fee. And that's paid to a third party by credit card. But we don't take any funds directly from us. There's no application fee. Would you be able to help a client purchase a property in Sweden?
Yeah, I mean, I think for Europe, the lending environment is very tough, especially for foreign nationals. But again, doable. It really depends on what area, what city, and also the loan amount. I think right now, during this coronavirus pandemic, lenders would prefer higher ticket items. So I think if it was a larger loan, then maybe something we can consider. But for the client that emailed us, please contact us directly. So I think one answer to all of this is, we are the world's only global mortgage specialist. And so we have a whole team dedicated to finding lenders to meet the needs of our borrowers. So pretty much any country, any sort of G20, Europe, Australia, Canada, US, obviously, parts of Asia, please call us. We can definitely do it.
Okay, thank you, everyone. And we will see you next time. Bye-bye.